Anirudh Sarkar, co-founder and CEO of Equinoa Investment Managers, joins us right now on the show on a day when the Nifty is stable for the first 45 minutes at the very least. Anirudh, thanks so much for joining in. Is this would you view this period as the one with uncertainty and a downward bias? Or do you believe the corrective move thus far bakes in the negative impact of the rising crude prices and the earnings loss for quarter 4 at the very least?
Yeah, hi Neeraj, very good morning. And I would say it's a good day to be on the screen because, when you have the green on the screen, it's good to talk about the market. But to be honest, I will say that if I look at the last 1 week, the way the Indian markets have behaved as compared to most of the global markets, I think it's very evident that at least the domestic investors are not going to sell in this event which is happening. And any decline in the stocks, which you would have seen in any company, I think the declines have been on extremely the low volumes. And as we all know, when the declines happen on the low volumes, it's an indication that it's not a panic selling which is happening, but more than that, the buyers are absent, and anyone who has to sell is just exiting at any price. So I would say the last 1 week's kind of the resilience of Indian markets gives me a confidence that a lot of investors' attention is moving beyond the geopolitics, beyond the crude, to actually the earnings which has just gone by. And I think that is where markets are gradually trying to align their portfolios, that looking at the pockets of where the earnings have been. Because I think if I look at this quarter numbers which went by, I think it was much better than most of the last 6-7 earnings quarters which has gone. So I would say market is looking a bit beyond the crude and the events, because we have had many wars in the past, and I think this is also going to be kind of the short-lived. Impacts are always very steep whenever the events happen, but the recovery is equally fast.
Anirudh, good morning. Were you a buyer in yesterday's market?
Yeah, absolutely. So any new clients who have, who have entered the portfolio, we have been buying and making advantage of all the panic which is there on the ground. And as I mentioned, the declines have been on extremely the low volumes, and that is giving me confidence that we are very close to kind of, seeing a decent upside in the market. Also because a lot of things has actually come together, and that's the reason, I'm buying in this market. So this month being the last month of the year, we all know that the long-term, short-term capital gains and the capital loss, all those adjustments happen. Along with that, we had the tightening from RBI with regard to the MTF trading, and to add on to it, we had the Middle East crisis. So everything got packed into 1 month, and I would say that the earnings is the green shoot in the whole pack of events, and that is where I'm betting on. And in fact, I was just hearing your earlier conversation on the auto sector, and I was happy that that sector continues to be the largest allocation in my portfolio.
Oh, is it? Autos is the largest. What else follows through? How are you looking at BFSI? How are you looking at some of the consumption plays, maybe the infra plays?
So on the consumption side, if I look in my portfolio, that is the largest allocation, and that will be followed by BFSI. Now within the consumption, auto and auto anchs, that is the lion's share in my portfolio. So I'm betting both on the CV cycle, I'm betting on the two-wheelers, I'm betting on the auto ancillaries. And that is where I would say the growth is definitely defining the broader market. And beyond the autos, I'm betting on the new age companies, I'm betting on, I would say, a couple of the consumption stocks. But on the BFSI side, my biggest holding is again the PSU banks, and I've been a big fan of the PSU banks for a long time, and that continues to be the top holding in the BFSI allocation. And yes, apart from banks, I would have the equity market plays, NBFC also, and I think we are seeing a good pickup in the appetite for the private capex in the economy, and I think that is where the bank lending growth will also start picking up.
Anirudh, how closely do you track energy, you guys as a team? Because I was looking at US cracks, for example. There are some crazy spikes there. Could this be beneficial for some of the refining companies, even though crude availability currently might be a bit of an issue for likes of MRPL, but Chennai Petro and some of the others, could they benefit?
No, Neeraj, unfortunately, we don't track the energy space, and OMCs is something I've always avoided because of too much of uncertainty on multiple factors. So I would not be able to comment much on that
Fair
part.
call. Okay, let's leave that out. Do you guys track metals? Because aluminum has gone off the ramps quite substantially. Some of the other base metals too have rallied, and this follows what has been a substantial year of 2025 in terms of price moves. Are these instead of being cyclical investment ideas becoming a bit structural, or is it too much to say?
No, I think you have put it very aptly. I would say that metals was always seen as a very kind of a cyclical short-term play. I think what we are seeing the current metal cycle, it's not very short-term. It's it's not a long-term play, but it's a medium-term play, and hence we are betting both on the ferrous as well as the non-ferrous, because I think a lot of economic activity, I would say a lot of demand supply mismatch is kind of going to see the impact on the metals for maybe a couple of more quarters, and hence we are definitely quite bullish on the entire space. It's not a core part of the portfolio. We have a core and a tactical. It's more a tactical part of the portfolio, but as I said, it's more kind of the medium term play and not a very short term play.
Okay. Medium term play and not a very short term play. But sorry, just to distill it further, between ferrous and non-ferrous, are you constructive on one, more constructive on one over the other?
On the non-ferrous.
No, so is it aluminum, is it copper, is it zinc, is it silver? Where does the favor come?
So it's a mix of all of them. So I have the zinc and the aluminum.
Okay. How are you looking at IT, Anirudh? Is it the contrarian bet? Is it any kind of a play right now? Valuations looking attractive to you?
The last part is yes, valuations are looking attractive, but I would say valuations are looking attractive only compared to its own past, but not to the rest of the world's IT companies. In all my earlier interviews on your platform, I've mentioned I continue to remain underweight on IT. As I speak, I don't have a single IT stock in my portfolio. And yes, the valuations are attractive, but I would want to wait for some signs of earnings pickup to justify the valuations which they are today. So it's not that everything is looking bad. There are pockets which are looking good, but yes, I would say the pockets which are looking good, there the valuations are expensive, and the pockets which are not looking good, there the valuations are not expensive, but earnings are not there. So I would say broadly, for me, IT remains an avoid as of now, unless we see some signs of earnings pickup.
I wonder what are the scenarios you're painting right now, Anirudh? Because with the kind of tone that we've seen in sentiment, is your sense that maybe now the worst is over, or we're going to have another volatile and jerky sort of trade for the next few days? What are the various scenarios and options that you're painting right now? Is the view more of preservation of capital or looking for opportunity?
So I would say, as I mentioned, so March will go by like this. I don't see a big up move in the month of March, practically because of all these geopolitical events, along with the year ending, the long-term, short-term adjustments, everything. So I would say March, definitely, I'm not looking at any big upside from where we are today. But having said that, even the downside looks very capped, because I think whatever bottom we made on the day the attacks happened on Iran and the subsequent attacks which happened in the entire Middle East region, I would say that is kind of the worst which you can see in the market, because if you have not broken those levels, even on a day like that, definitely there are definitely the buyers in the market at those levels. So I would say March will practically go where it is today, up and down a couple of 100 points here and there. But I would say I am more constructive on the buying side because I see good valuation comfort. And when I say valuation, I'm looking at the PEG ratio, because when I look at the PEG ratio, interestingly, my portfolio PEG is at 0.85. That gives me a lot of confidence that, earnings are definitely way ahead of what the market is pricing on the P multiple. So that is where I would say I'm a buyer in the market in this month, giving a lot of confidence in different sectors, as I mentioned. BFSI or the consumption, in fact, even industrials and capex. A lot of industrial stocks have been beaten down because of their exposure to the Middle East. I think, yes, there will be some short-term impact in this quarter on the earnings, but you're getting them at good prices, good valuation for a medium to long-term perspective. So I would be a buyer in the market.
In the market. Okay, Anirudh, one question. I believe your portfolio, from whatever little we understand, peppered with a decent mix of the SMIDs as well, the mid caps and the small caps. A lot of small caps got decimated, but there was an earnings recovery seen in Q3. If you presume that that could be extrapolated, are you putting in incremental money more towards the small caps or more towards the large caps?
I'm biased towards the small caps and mid caps in a big way. And I've been telling people, if you want to make money for the next 36 months, use this time to buy into good small and mid caps. It's not that you should avoid large caps. There are good large caps also. But as of today, my portfolio would have around 34 to 35% into the large cap, and balance would be into the small and mid. So that shows my biasness towards the small and mid. The main reason for being biased towards small and mid is valuation comfort again. If I look at the PEG ratio for the small cap index vis-a-vis the mid cap and the large cap index, it's interesting that the small cap index PEG ratio is much lower compared to the mid cap and the large cap index. Now that gives you comfort that the earnings pickup is much faster there. In fact, if you look in this quarter numbers which went by, I think the small cap index hands down they outperformed the large cap and the mid cap on the earnings front. So I think that is where, in fact, you mentioned about a lot of stocks being, beaten down. It's very interesting to see that there are many good small caps making fresh highs in this market. I'm sure, you would also be looking at those companies. So there are many good small caps making new highs in a market which is beaten down and a lot of panic is there. So that is again boiling down to what you buy in the small cap space. And I would say from where we are today, I would remain biased towards small and mid cap because that is where earnings recovery is much faster.
And that's also where the biggest hit took place. Thank you so much, Anirudh, for speaking with us. Always a pleasure.